Hey everyone, Couch Investor back to another video for you today. So we did talk about the 4 stocks to watch pickup for the month of July last week. Now in this video, I want to talk about the 4 companies that are worth your while for the next 6 months, for the second half of 2023. Of course, if you look at the first half of this year, if you look at tech stocks, growth stocks, it has been pretty good, right? The returns have been very, very nice, especially if you compare it to the returns of last year. Now there is a graph I want to show you and talk about what happened in the history of the stock market when the first half of the year was super positive, what happens in the second half of the year. And then we're going to talk about the 4 companies throughout this video. So this is the S&P 500 returns after a 10% surge in the first half of the year. So if you look at the prior 95 years of history of the S&P 500, in 61 years, returns in the first half were positive. In 28 years, or nearly half the time, the index posted double-digit percentage gains, including this year, which saw the index rise approximately 16% to start the year. And in this year, the second half returned on average 6% with a win rate of 75% and an average Sharpe ratio of 0.87. Now, Sharpe ratio is a measure of an investment risk-adjusted performance calculated by comparing its returns to that of a risk-free asset. Now, if you look at the first 6 months return following a year of negative results, which includes this year, that improves the odds. So in those 10 years, the average second half return was 9.8%. The median return was 11.5% and the win rate was 80%. And an unvaluable average Sharpe ratio of 1.82. Of course, this does suggest that mean reversion is alive and well, but on an annual rather than a semi-annual time frame. Now, of course, some might say history doesn't repeat itself, but it often rhymes. And right now, we might not be in the same situation as in prior years, right? We had pandemic, then high inflation, possible recession, or there was already a recession, we don't know anymore. So of course it's a bit different this time, but that's why we take an average and a pretty good one throughout 95 years. So looking at those numbers, second half of the year could be another good one. So now before we jump into the first company, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. We're trying to reach 30,000 subscribers by the end of the year, so thank you very much. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now the following 4 companies are just my personal picks, and yes, I do own those companies, so I'm a bit biased there. But I'm sure some of you own these companies as well. If you have other picks for the second half of the year and onwards, let me know down in the comments below. So first company I want to touch on is a company in Latin America. You might have heard of this. It's Mercado Libre. So we're here on Koifin. By the way, if you like this platform, I also have a link down in the description below. You get 10% off. So year to date, the results are pretty good, up 40%, but the majority of the first half of 2023, the stock has been flat, despite the huge rise here in the first month of the year. After that, it was basically flat, if not down. Now, if you look at valuation, PE ratio for the next 12 months, 61 times. So yes, not on the cheap side, but we're going to have a look at the growth rates and the analyst estimates in just a second, because it is growing pretty fast. So with regards to sales estimates for the next coming years, so fiscal year 2023, 2024, and 2025, you can see a very, very nice growth there. So 28% closely, 21%, and then 23% growth there for sales. Now, if we look at earnings per share, same thing there, tremendous growth. So fiscal year 2023, close to 80% growth there, 24 close to 30%, and then fiscal year 2025, 38%. And if you look at the stock price and the way EPS is doing, well, EPS has gone up, stock price has gone down. Same thing can be said here with sales, which is always nice to see that the stock will have to catch up with the company. Usually that's much better than, well, the company having to catch up with the stock price. And with regards to growth in Latin America, so we're here on Statista, so you can see that in the coming years, despite a huge rise here in 2021 because of the pandemic, you can still see that we're expecting to grow quite nicely, close to the 30% there up until 2025. And if you needed a quick review of last quarter's earnings, here it is. Again, tremendous growth across the board, and we aren't even looking at Mercado Shops, which is basically the equivalent of, well, opening up a Shopify store. That will be an additional growth driver for a company as well as advertising. Next up is a company you all know very, very well. It's the number one position in my portfolio, and that's Tesla. Yes, I do think that Tesla, even in the second half of the year, can be a very, very good pick, despite it being up 127% year to date, up 50% in the last 3 months. Yes, traditionally speaking, PE ratio of 74.7 times in the next 12 months, it's not cheap. But if you look at the way it is growing across the board, especially even right now in this current macroeconomic environment, we've seen the production numbers, we've seen the delivery numbers. Of course, year over year is a bit, well, it's not really fair to compare it year over year, because last year during that quarter we had shutdowns in Shanghai. So yes, that number becomes much better. But quarter over quarter we also grew, and they are currently expected to reach approximately 2 million cars for this year. And of course, we're all waiting for the launch of the Cybertruck. Now, right now, we're only talking about one part of the business. There's still the energy side of things, which as always, everybody is forgetting. I would love to see those numbers continue to grow incrementally. Now here, if we look at the estimates, even with sales, you can clearly see that again, sales has gone up faster than the stock price, even if the stock price has gone up tremendously year to date. If you look at fiscal year 2023, expected to grow 24%, fiscal year 24 close to 29%, and fiscal year 2025, 23.43%, reaching $160 billion that year. Now, if we look at EPS is a bit closer to the stock price here, the movement of both of them. Yes, this year they are expected to take a hit because of all of those price cuts, but then next year reacceleration, 44% growth there, and then fiscal year 2025 another 21% there. And of course I have to add, these are just estimates. They can be right, they can be extremely wrong as well. Sometimes those numbers exceed expectations, sometimes those numbers miss by a lot. Up next, company number 3, and that's a company that is also pretty high in my portfolio, actually the number 2 position, very, very popular stock on this channel as well, and that's Amazon. Now, Amazon, despite being $1.3 trillion in market cap, despite being up close to 55% this year, despite having a valuation, a PE ratio of 75.7 times in the next 12 months, I do think that we're going to see more positive news in the second half of the year, especially when it comes to the reacceleration of AWS. And here, with regards to estimates, you can also see a big, I won't call it a disconnect, but a big gap between sales growth and the stock price. So for fiscal year 2023, it's expected to grow over 9%. Fiscal year 2024, a little reacceleration there, 11.7%. And then for fiscal year 2025, 11.87%. When you look at earnings per share, this is where things get way more interesting. For this year, they don't give us a number here because last year, well, it was negative. But for fiscal year 2024, 65.31% there. And then fiscal year 2025, 43.53%. And I have already shown you this slide from the last earnings report. Operating cash flow has been improving in the last couple of quarters, and actually it is looking pretty nice there. Free cash flow as well, although it's still negative. Well, last quarter was still negative. You can see a huge improvement already since Q1 2022. And here just an extra thing, nice thing to know. So Amazon will roll out its first electric delivery vans from Rivian in Europe. With more than 300 new electric vans from Rivian will hit the road in Germany in the coming weeks. So congrats to the team. And now company number 4, last one for this video, is a company I touched on in the 4 stocks to buy in the month of July, and that's Block. Now, despite me not being such a big fan of their CEO, I think they could be doing much better than that. I do think that for the second half of the year, this stock will outperform. I'm saying this also because, well, year to date, it's only up 9.37%. And there's, of course, reasons for that. Valuation-wise, PE for the next 12 months, 38.6 times. It has a market cap of just over $41 billion. There's still a lot of growth ahead of this business, especially when it comes to the profitability of the business. Now we're first going to have a look at the estimates. So here, if you look at sales and the stock price, there's a huge gap there. So for fiscal year 2023, growth is expected to be 18%, 2024 13%, and 2025 14.3%. Now if we look at earnings per share, things look a bit different there. Huge growth there. Fiscal year 2023, 70% growth for the year. 24, 38.6%, and then 2025, 34.14%. Now we have already seen that gross profit has been increasing quite well in the last couple of quarters and in the last couple of years as well. So you can see the profitability of this business. Of course, if you look at net income, operating income, yes, that's still negative a tiny bit. But if you look at gross profit overall and then gross profit for Cash App and for Square, you can see that the business itself, the underlying thing, has been pretty good when it comes to profitability. Now, I'm not saying we should stay like this, right? With gross profit keep going up and then operating income and net income being really not that stable and at a loss still. No, like I said, I do want to see those numbers become positive sooner rather than later. But with Square, with Block, Cash App, the whole ecosystem, Afterpay, I do think that there is a lot of growth ahead of it, not just in the United States, but in Europe and Australia as well. So that will be it for me in this video. Those are the 4 companies I think are worth your while for the second half of the year and even further than that. Do share your picks down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.